thank God for our founder, our national president, the Reverend Jesse Jackson, and how you continue to lift him, encourage him, allow us to hold his arms up as he continues to lift this nation to moral high ground from economic common ground. So now, God, as we go forth in this session, let it be a beacon of light, a beacon of hope. We ask these things in your name. Let every heart say, amen.
Amen. Amen. Thank you. That was beautiful and an inspiring way to start. I'm Terry Savage. If you've been in Chicago for a long time, you might have seen me on radio, on television, radio, read my columns, which run in the Tribune. I've devoted my life to financial literacy, and I'm very honored to have been asked to kind of organize this event today. You know, Reverend Williams said something that really struck. We talk a lot. We've passed a lot of laws. You never know if it really, really works. If the efforts you put into a program like this or throughout your lifetime of helping people, if they really work. Before we start, I am honored to give you something that was totally unrehearsed and unplanned for. It happened maybe 20 minutes ago. I initially planned, as I will introduce my panelists, to introduce Hetty Ratner, who co-founded the Women's Business Development Center back in the mid-1980s and has helped a generation of women-owned and minority-owned small businesses gain certification. I remember when she first told me I should get certified. I said, I am a woman. Everybody could see that. No, Terry, it's important that you tell these corporations you work with that you're a woman-owned business. She helps so many people. You never hear about that. Sometimes someone will come up to me and say, I listened to you 25 years ago and I opened an IRA and now I'm rich, but not enough. But here's what happened. Come on up, Hetty. Hetty and I were standing here talking, and a gentleman who's the video person, I said, oh, I'm so glad to see you, Raul Salim. Come on over here, guys, right in the front. I'm going to put you right here where there's a clean background. I want you to tell this story because I'm going to give you the mic. So Hetty and I were standing here, Raul was sitting here and talking about the video wall, and I hear him talking to Hetty. Now, Raul, just in a brief thing, just tell me what you told Hetty.
Okay, good morning, everyone. I saw Hetty in the audience when we were doing the setup this morning, and I just wanted to thank her, personally, because she helped push our business forward. We were looking to get into government contracting and our minority certifications, and we didn't have a clue on how to do all those kind of things. And we're members of the Chamber of Commerce, and they suggested that we reach out to the Women's Business Development Center to help us with getting those certifications done. I called, had a meeting, went down there, and met with her team, and they enrolled me into a program called gov.com. And I was one of the few businesses that were selected, and we went through this, I think it was 8-week cohort, and they showed us from left to right how to get these certifications done. But at the end, I've done things like that before, but we never had a result. When we left the Women's Business Development Center, I left with the certification in hand. The city, the state, and the Department of Transportation, which was a big one because I'm a reseller of these equipments, they helped, and since then, I was able to, I'm a Chicago public school vendor. We've been installing inside the schools. We work with the city colleges. We do events like this. And I just wanted to thank Hattie for helping our business to grow. We secured business funding, all from that one little, and no one else. I've been to so many different places. And I noticed Hattie, and she was out here, she was so friendly, and her team helped us and just held us our hand all the way through the process, and I just want to thank you for that. And we're here today providing this beautiful LED wall and support for Operation Push.
Well, he just made my day, maybe made my week. It's what, the work that we've done for the past 40 years makes it all worthwhile because of the stories like this. And probably there's some of you here, women and minorities, who took advantage of some of our programs, free programs, at the Women's Business Development Center. But Latika will tell you more about it. But also, I've been involved with Reverend Jackson in Operation Push for many, many years, and we've shared resources and supported each other. So I'm thrilled to be here. And this is my old hood, because I used to hang out, because this was my neighborhood. So we're in the most beautiful room in the city, as you all know. But thank you, and Terry Savage is spectacular, and this is a panel that will help you. Okay.
Thank you, Hetty Radner. Oh my gosh, thank you, Raul. And that, as I said, was totally impromptu. So we're going to do 2 sessions today, just give you a quick little break up, and I'm claiming all my time, even though we started a little bit late, because we have some terrific people to speak here with us today. The first panel is going to be about the nuts and bolts of getting the money and getting the help. I just want to remind everybody that we have a nice audience in this room, but this is also being videotaped, will be replayed to countless audiences who will be very appreciative of all the tips that you can give to make sure that even though we're, what do we say, Robbie? When was the Community Reinvestment Act?
1977.
1977. I think that's like almost 50 years ago, and the communities haven't gotten enough reinvestment. But it was supposed to hold the feet of the banks to the fire to invest, and we're still talking about it almost 50 years later. So that's what I want to find out today. What are the practical tips that these gentlemen and ladies can give us? I'm going to introduce them all first. On my immediate right is Maurice Coleman. He is the quintessential banker. He's with Bank of America now, but he's been active on Wall Street and beyond for more than 25 years. He was chairman of the Investment and Loan Committee for small business lending for the largest empowerment zone in the country. That goes back a way. He was chairman of the board for LISC, you all know LISC, New York City, and chair of Lending and Investment Committee and Affordable Housing, Economic Development. As a banker, he's done tech, he's done media and entertainment deals. And more recently, you remember those PPP loans the government was giving out during the pandemic? He was involved in deploying that money for Bank of America. And one more thing, the bio is so long we wouldn't let you have a chance to talk, but I thought it was interesting. He was the architect to help True Fund launch the only private equity fund focused on minority developers in conjunction with Morgan Stanley and the Ford Foundation. I said when I got this bio, Maurice, this is about small business getting money. I want your tips, and we're going to get them from you. But let me introduce Robbie Schapira. He is the Senior Vice President, this came in from Seattle for this, and Director of Small Business Diverse Customer Segments for Wells Fargo Bank. I asked him to please give us some tips for the best way to get a loan. He's going to share public insights from the Small Business Credit Survey just last year, 2021 report on firms owned by people of color. It's a report that was compiled by the Federal Reserve. And I'm going to ask him to talk about some of those statistics which prove it's not just your imagination that loans are tougher to get. Even the Federal Reserve knows it. Loans are tougher to get for minority and women-owned businesses. And our third panelist is Latika, the Chief Financial Officer of the Women's Business Development Center, of which Hetty created and you just met. WBDC serves a 9-state Midwest region, helping certify minority businesses and women's businesses. The first step in helping, as you just heard, boy, that was an intro that you couldn't pay for. First step in helping diverse business owners compete for contracts and engage with those large companies who have found it in their conscience that they want to prioritize the support of diverse-owned businesses. And this is really important. I'm going to ask Latika to talk about this. The WBDC has created its own connection with the banks to actually help fund businesses. Latika has had decades in investment banking and finance. Last year, congratulations, she was honored with the 2021 Entrepreneurial Women Impact Award by NAWBO, the National Association of Women Business Owners. She serves on the board of the First Women's Bank in Chicago, a newly constructed bank, and she's a University of Chicago Booth School MBA alum, and she sits on their Alumni Venture Fund board. So this is all about, we call this section of the program, Where's the Money? Latika, I'm going to start with you. With all these accolades, we know it worked. I mean, we now have proof right in this room that it worked. Why isn't it working more and better for minority and women-owned businesses to find funding? And I'm going to ask you all to speak right into the microphone. It's a cavernous room.
Yes, good morning, everyone. So the WBDC played a very unusual role last year, which I'm going to lead into the answer to this question that Terry asked. Over the last 2 years, since COVID started, we have been working with state, city, and county governments in the state of Illinois to review application for grant fundings, and we're responsible for dispersing close to, I would say, $250 million directly into the hands of small business owners across the state. So about 9,000 small businesses received that funding. And this is what we've done over the past 2 years. So we are not a data-driven organization, but we like to keep ourselves what I call data-informed. So once the entire review process kind of wrapped up, we looked at what happened. You know, in the past 2 years, we've done so much work. Why did we see this index shifting towards certain types of businesses receiving more grant funding versus the businesses that didn't? So we really looked at every single application, who received, which zip code they received money in, which county received more money. And what it informed us was that there were two issues here. One was awareness. That was a distinct pillar. There was an entire segment of population that wasn't aware that these programs were being launched. You had, ads on NPR, you had ads in the newspapers, but despite that, we needed more grassroots organizations to be involved in actually spreading the word about these programs to the communities. We needed churches involved. So we really found out that awareness was a big issue. The second issue was preparedness. There were a lot of businesses, they applied, but they weren't ready to absorb this capital. So I think the last 2 years were a little unusual. This was the first time in American history where there was a lot of capital available through federal grant programs, through PPP, through the economic injury disaster loan programs. So I think access to capital wasn't an issue. It was who was able to access this capital and actually absorb it. And preparedness played a big role in that problem, and we really, really worked hard to hold small business hands and really help them with what we call the foundational pillars of what makes a compliant business. So is your business license in place? Are your taxes filed? So really these very basic fundamental things that small businesses needed help with, we stepped in and provided that help. So my mantra has always been right capital, right time, from the right source. Over the past 2 years, if you could get access to grant money, we weren't actually advocating for debt because, grant money in the end of the day is almost like equity, and there were no strings attached to it other than the use of funds. So we really, really advocated for all small businesses that we work with to reach out and access grant funding. Now, COVID money is slowly dying out, and traditional debt is going to play a very important role in the recovery process. So in my mind, right now, small businesses really need to focus on building relationships with their business bankers. They need to start thinking about their cash flow. Banks have tightened their credit curves. It's becoming harder to borrow money. Inflation is playing a really big role in it. We have this trifecta of COVID, labor shortage, and inflationary pressures, and small businesses are really suffering. And to overcome that, please take help of organizations like ours that provide no-cost, free counseling to any business that comes to us, and we will hold your hand and get you ready to access debt funding. And for me, the biggest thing is awareness. You have to be aware of what is available out there for you to access. And we have so many different financial institutions offering programs for small businesses at lower interest rates. You have government-funded CDFIs and minority depository institutions, the MDIs, that also offer low-cost interest rate loans. So be aware of what's available.
Well, you're
and then
aware.
take the help.
Well, you're aware.
Yes.
You're aware, and that's the advantage. Now, I didn't plan the seating exactly perfectly, but you just tossed it to Robbie Schapira, who is the banker that knows those programs, and Wells Fargo has a commitment to diverse-owned businesses. So, Robbie, great. Now we've got the Women's Business Development Center and other organizations making people aware and holding their hands, telling them what they need. I'm going to come back to you later and ask you your top 3 tips for the 3 things that you know that small businesses need first before they go to the bankers. But you're the banker. CRA, almost 50 years old. Why are we still discussing the inability to act? How do you get to be friends with a banker if you live 12 blocks west?
Yeah, thanks, Terry. And I loved everything you said. Thank you so much for the work you've done during COVID and as hopefully we're emerging. You know, I think the first is the comfort level with banking, especially in diverse communities, is still really low. Because the reality of if you are a diverse business owner, a Black African-American business owner, a woman business owner, then you have a history of open systemic discrimination that has taught you generation after generation that a bank may not be the most welcome place for you. And we can see that literally, as we were talking earlier, I was talking about HR 5050. This is a law that was passed in 1989 that made it illegal for states to require women business owners to have a male cosigner. That was passed in 1989, which means prior to 1989, there were states with legislation that said a woman business owner had to have a male cosigner, often from their family, to apply for lending. So the reality is, Terry, is even though 50 years of CRA is the generational impact of that, of legislation like that and bias is still being felt by diverse businesses today. And so I'm going to hopefully not steal too much of your thunder, but you know, the first thing that I always recommend to business owners is going into a bank, and Latika, you said this, forming a relationship with a banker who can advocate for you is so important because banks are storage houses of information. So the deposit history, your payment history, if you process credit and debit cards, that history makes you more lendable and allows the bank to offset potential risk and create a more comprehensive credit profile. So it is true that the bank you should apply at first is the bank that knows you the best, because that financial institution is going to be able to have a more comprehensive view of you, your history, your business. And a banker that advocates effectively, Terry, is so important because they're the ones that submit the application that goes to the underwriter for review, that goes to the processor.
Let me push you on this. I don't know where Wells Fargo's branches are in Chicago, but you know, if you are starting a business in your own community, where most people start their own businesses, you know, bankers have been replaced by ATMs. Yeah. I guess there are tellers, but a lot of people don't know how they can tell, quote, a banker in their neighborhood local branch office. So this sounds really great at the corporate level. Form a relationship with your banker. Heck, I even married one once, you know, but savage truth. But that's another story. But the point is, if you live in the neighborhood and that's where you know, maybe you're no longer cashing your checks, you're smart. You're not going to the currency exchange and paying $1 zillion to cash your check or something like that. There's a bank. You got to the point where you would open up an account, you would have a debit card, you'd take Square or something else, and so you have a banking relationship. How do you find the banker in there? And what if there isn't a banker in your local office, is where I was, long-winded way of what I was going to ask. How do you start a relationship?
I mean, I would say 2 things. One is the bank itself, you're building a relationship, your information is powerful towards that lending decision. Okay. So even if your banker has turned over, which, you know, how many people are feeling a hiring crisis right now? I mean, in the financial industry, we certainly are. And so the reality of having, I mean, I started as a banker in 1998. And I helped cultivate relationships with clients at the same branch for 5 years, but even the reality of that, to your point, Terry, has changed. So I would say 2 things. The first is the financial institution that has your information, that alone is valuable. The second is when you are sitting with a banker, even if it's your first time meeting them, you can tell the difference of someone who's really listening and is engaging with you and believes believes in what you're saying. I mean, I love the chance to meet business owners, and I believe business owners can tell that, and that level of trust that I can build in the moment because they know I'm listening and therefore going to advocate for them. So even if it's your first time meeting that banker, helping them to believe in you, your business, be your advocate, or to be honest, find another banker. Find another branch of that institution if they're the ones with all your information, or to be honest, take a chance on a new institution, build your relationship there, because having that kind of service, having a banker that knows the program, that would fit your needs, the product that fits your needs, that listens and advocates for you, that calls you back when they say they will, I mean, that's really important in this industry.
That's a key takeaway, and they're supposed to do that. So if the branch out here, but the main branch is downtown, you just walk in and say, I've been banking with you on 63rd and something or other for a long time. I want to grow my business. Where do you walk into First Chicago, not First Chicago, that dates me, Chase, downtown, or whatever, the big branches? You just walk in and say, I'm a client, I'd like to speak to a banker?
Absolutely. Yeah, I mean, I was in branch banking for most of my career, and the reality is the larger, busier branches staff the more specialized bankers. And if you have your relationship with that institution, maybe that's just where you go when you need the real serious stuff, like I want to talk about a lending relationship, or I need to talk through my cash flow as a business owner. Absolutely, Terry.
All right, that's a great takeaway. So Latika's first takeaway was you need to know what's out there. Yeah, and you probably need help because where would you find it? I don't think you can Google it exactly, and you need to know how to present it. Your takeaway as the banker is, yes, speak up, stand up, and demand attention, not from the teller behind the counter who takes your change or whatever, but from a banker who's involved in the lending side. All right, now I want to take this to another level, Maurice Coleman. You've been involved in so many aspects of this, but could I just start out with the economy? Because Latika made a very good point. Despite the horrendous nature of the last couple of years, there was money around. Now, that doesn't mean everybody has money. I'm not trying to say that. But there was money in the system. And it came from all of these programs and more. Now we're starting with the Federal Reserve, who has announced publicly they're raising interest rates and they're sucking the money out of the system that they helped put into it. And so it doesn't take an economic genius to think things are going to tighten up. How do you think, Maurice, that's going to impact small businesses and the availability of money for them to grow?
Terry, thank you for that question. Let me take care of a couple of just quick housekeeping pieces first. First of all, can you give yourselves and Rainbow Push, I saw John Mitchell, I see Dr. Uri in the back, Dr. Bryant, Terry Savage, thank you so much. Can you give yourselves a round of applause for being here? We just came out of a global pandemic, and we are now back together again. And this ties directly to Terry's point. We banter. Terry's a legend in this space because she has taken the skills of Wall Street and has translated them to improve our communities and our streets. And for that, you should definitely be recognized. Thank you, Terry. So she asked me to just give you some straight talk. So let me begin with some fundamentals as I walk us back to where we were over the past 18 months. I have a 16-year-old and I have a 13-year-old. And my children like to say to me and their friends, they say, Mr. Coleman, Mr. C, we love you because you always keep it 100. And as Terry said that she married a banker, she probably retired him because he was an expired asset. But I tell my kids, and their friends, I said, don't keep it 100 with me. I need you to keep it a minimum of 700 plus, because that's your credit score. I cannot do anything with you keeping it 100. Let me say that again. I need you to keep it a minimum of 700 plus, because your credit score is your adult report card. You see, over the past 18 months, we've learned at least three things. One, we learned that the fundamentals of financing still matter. When you walk into a bank, they're going to look at you. This is what Robbie mentioned, your character, the 5 C's of credit. They don't go away. They're going to look at your character. They're going to want to understand your capacity, your debt to income ratio. They're going to want to understand your collateral, your cash flow, and your credit history. Who do you owe? How much do you owe? And how good have you been at paying them back? Understand your credit score, understand your financial profile before you step into a financial institution. Because the last 3 years taught us a few things. 2 years taught us a few things. One, we now need to be balanced. Robbie talked about banking. Here's banking right here, people. This is banking. You could do all the things you need to do digitally right now. So you need to be approaching everything that you do in a hybrid fashion. It's not just about brick and mortar anymore. I deposit my checks, conduct transactions right here from my phone. This is the new world that we live in. We all saw it. How many people in here like me didn't know what Zoom was 2 years ago? Now you use it every single day. Zoom, WebEx, right? We use these tools now, right? Microsoft Teams, we all have to get used to working in this hybrid remote environment. The second thing it taught us was flexibility. We have to know who we are, and we have to know what our product is and what our clients want. So it's not enough for me to be able to just sit back in my bank, in my Ivy Tower. I have to go and meet you where you are. And I have to give you the content digitally to make sure that you can access it wherever you want it, whenever you want it. That's the new world we live in. That's banking today. So in this rising interest rate environment, you have to be able to check on your phone to see how much that mortgage is going to cost you today. You have to have access to all of your accounts right here via your phone. That's the new environment that we live in. And finally, last but not least, to Terry's point, you have to build a reserve. Too many of our companies do not have a reserve. So unfortunately, when they got hit hard. Because here's the other jewel I want you to walk away with. If you're not networking, you're not working. It's not just what you know, it's not just who you know, but it's who knows you. And what do they know you for? Establish a relationship with your banker before you need them. That way, when you do need them, they understand who you are. I've been on Wall Street for over 20 years. I have never had a spreadsheet pay me back. People pay you back. That's why the first C of credit is character. I need to know your character. I need to know that when things get tough, you are going to show up and we're going to have a relationship to get it done. That's what we learned over the last 2 years, and those are the lessons that we have to take and carry forward.
Wow. As in wow. Okay.
Can I add something? Do you mind, Terry?
Sure.
You know, I loved everything Maurice just said, and the last thing I would add to it is that the best time to borrow is when you don't need it. Because that is when all those C's that Maurice was talking about look the strongest. I mean, you can't impact the conditions of the economy, but when your credit history is the strongest, when you have the highest balances, when your cash flow is the strongest, but it's counterintuitive because I'll tell you, I used to manage all of our branch small business bankers across the country, and believe me also, there is intimidated by a business owner, as I know business owners can feel intimidated by a banker. But having a conversation about, you know, the line of credit that we've been talking about, the best time to get it is now when you're not going to use it, because your credit history is the strongest, because your cash flow is the strongest. And if we do find ourselves dipping into a recession, you know, as you were saying earlier, Latika, the reality of credit availability could decrease. And so if you as a business owner have been contemplating having access to capital through something like a line of credit, the best time to get it is now if your business doesn't need it, because you're in the best position for that approval at the best rate with the best limit.
That's right.
I see you nodding, Latika. You remember recessions. Businesses come in recessions, but that's when they decide they need help, but because business dries up. I mean, it just happens. Are you suddenly seeing an influx of people now, Latika, at WBDC? What does the look like out there?
So the people coming to us for help, I'd say has increased over 300%.
Over
the past
300%?
2 years. It has been incredibly taxing for the team as well, because we're just serving that many more people. I do have two comments, though. One is on the digital piece, because this is something we did notice, that there is no digital equity when it comes to small businesses.
No digital equity?
So
What
I'm
does
going to
that mean?
explain what I mean by that is, you know, you have slightly bigger, more established businesses who do use systems, who have infrastructures in place to actually tap into what I call, majority of the digital banking systems and everything that's out there digitally to run your business. But you have the smaller businesses in a lot of the communities that we serve where we had to go out to farmers markets, to local libraries, to even help them scan their tax returns to apply for grant programs. So you have the governor right now saying that he's going to include, broadband's going to be as ubiquitous as electricity in the state of Illinois. For me, I think we need to have a digital equity and inclusion plan so that we are bringing these small businesses up with us so that as broadband becomes like electricity and as ubiquitous and as easily available like electricity, they are able to tap into it and actually grow in a sustainable fashion. So I think that's like one of our biggest focuses.
I'm going to ask you in a minute, so in just short right now, to give me 3 tips. So, and I can't resist a little bit of a sidebar here. Maurice, you said something about your credit score. I talk about this stuff all the time, so let me turn into Terry the money lady for just a minute. You can, first of all, you need to know. This is not one of those things like, I don't know, I don't want to know. And the easiest way to do this online, speaking of digital, just go to a website called creditkarma.com, creditkarma.com. It's free. It may be even on your bank statement, but if you just want to go and you don't want your bank even to know that's what you're looking at, go to creditkarma.com, sign up. You'll have to give some personal information. That's okay. How can they get your score if they don't take your Social Security number? So don't be afraid of that. And it's secure. And then they will notify you every time your credit changes. Why would it change? Well, first of all, credit scores go up to 850. That's the top of the line. So 700 is the minimal thing. A lot of people don't have any credit or a very low credit score because they don't have any credit. The secret to getting credit is to take a credit card, just one credit card. I'll tell you how to get one if you don't have one already and you don't have any credit history. Take that one card, charge on it every month a little bit, pay it off on time and in full. Don't be tempted by the minimum payments. Pay that off every month. Those card issuers report to the credit bureaus, and the credit score is derived from the information at the credit bureaus. People say, but I can't get a credit card because I don't have any credit, because my score is low because I don't have any. You go to creditcards.com and look up secured cards. You put a deposit, typically $500 or $1,000 in the bank, just in a savings account, and that becomes your line of credit. And they'll give you a card. You can't charge any more than that. Same thing. You charge on it every month. You get online and you pay it off instantly. You use your online bill pay or send them a check, but pay on time every month. They'll start reporting that. You'll be deluged with offers of regular credit cards. You need to have credit, and you need to have good credit. Getting credit is easy if you follow those steps. Creditcards.com, a secured card. Go to creditkarma.com and find your credit score. Use that credit card, but use it wisely. That builds your credit. They want to see a long history of credit. So that's my Terry's tip, which I couldn't resist putting in, but that's for everybody. Latika, give me quick, there are 3 tips for small businesses who don't even know what they don't know.
So to access debt, I think for me, don't only always just think about traditional bank debt. There are other types of debt available as well. So you have micro-lending platforms like Kiva, where if you just have small requirements for your business, it's 0% interest, it's 3-year term loans. I think that's a really good option for very small community-based businesses.
Say the name again, it's Kiva.
Kiva, K-I-V-A. It's a crowdfunding platform, and the WBDC is the only Kiva hub for the greater Chicago and Collier counties area. And we've had incredible success with it. Just the thirst for debt capital at really low interest rates for people having really poor credit scores is very high. So a lot of the people that we help get money through Kiva have 500, 600 credit scores. They are immigrants in the country, or they are, a really poor, located in very, what I would call low-income communities where they're trying to build a business and really uplift the community with them by providing job opportunities. So Kiva has been incredibly successful. So again, awareness, be aware that a program like that exists and we can help you get that money. The other thing, relationship banking, is something I'm going to piggyback off because PPP loans kind of really hammered it into every single small business owner in America how important relationship banking was. Yes, anyone could apply online, but if you did have an existing relationship with a banker, how much easier was it to actually access this really vast pool of money? And the third thing, and this is actually one of my pet peeves with a lot of financial institutions, is the fact that credit scores are the gatekeeper. You know, I wish they were a little bit more flexible on that because I think inherently it is a very racist metric because people who are poor, when the economy turns, it tends to directly impact their credit scores. So I feel that we really need to be aware of that and really need to push for legislation that will, banks are very slow moving, I completely understand that, but really need to have them think about alternative ways of reviewing creditworthiness of an individual. Like, right now, COVID has thrown out what bankers would traditionally look at, which is past 6 to 12 months of historical revenues being an accurate predictor of future growth. That's out of the window right now. So this is such a great time to reevaluate how they should be thinking about creditworthiness of small businesses. And I think the last thing is know your numbers. If there is one thing I could have small business owners take away from this is know your numbers. Really understand what your numbers are telling you for your business, because if you don't have a handle on them, then you're not using them to make good decisions for your business, and someone else will make the decision for you. So really,
and you forgot one important website, Women's Business Development Center, WBDC, womensbusinessdevelopmentcenter.org, where you can access all of this information. Here in Chicago and satellite offices, lots of places. All right, Robbie, give me 3 tips for small businesses from the bank. This is from the banker's point of view.
Yeah. Thank you. The first is I'm going to go back to what Maurice and I were sharing earlier, which is, the keys, and what you just reemphasized it, the keys of getting approved. The first is applying. And so the reality is that if you are unsure, if you're uncomfortable, just know that that banker is also unsure and uncomfortable because they want to take care of you. The good bankers do. And remember, we talked about pick a great banker that listens, that follows up with you. If not, find another banker because you deserve that as a business owner. The second component of borrowing when you don't need it. If we move into a recession, please don't apply 3, 6, 9, 12 months from now when business has slowed down. Apply now when your business is doing well. And for the last one, I'm going to just tell a very quick story, but at Wells Fargo, we did almost $14 billion in PPP loans in the last 2 years. And for that, in 2020, we received $420 million from the SBA. And we donated every dollar of that $420 million because we knew that PPP only went to a small percentage of business owners and that diverse and women-owned businesses got less than non-diverse and male-owned businesses. And all of those dollars, the majority went to what Latika talked about earlier, which are CDFIs. And Terry, you talked about secured card as a way to build credit on the personal side. If you've never heard of a CDFI, they're a community development financial institution. And financial institutions like Bank of America and Wells Fargo, we pour millions of dollars into them to incubate small businesses. And one of the things I'm really proud of at Wells Fargo is we partnered with a nonprofit called the Community Reinvestment Fund. They have a platform called Connect to Capital. It's the number 2 instead of the word 2. So if you Google Connect to Capital, the number 2, what you'll find is that you...
.com or org?
.com.
.com.
Then what you'll find is that you can build a profile to be matched to a CDFI. And I know some of you watching may not be in the Illinois area, so if you're not, like I'm not, I'm from Seattle, then it'll connect you to a CDFI in your local community. And the whole point of these CDFIs is to help you be credit ready for a bank, but to get you credit today, if at all possible. And to Latika's point, they don't use a traditional underwriting model. They use a lending committee, they look at alternative data, they can use diverse types of collateral, and so the world of lending can open up to business owners, and many of them very specifically serve diverse and women-owned businesses. So if you've never heard of a CDFI, if you don't know where to go to Connect 2 Capital. We're a very proud partner of theirs as we refer our customers to get CDFI support and be incubated for that next stage of credit. And it's just been a pleasure.
What a great tip. CFI, it stands for?
CDFI.
CDFI.
Community Development Financial Institution.
Okay, and they're around the country.
All around the country. There's more than 300 of them.
And you can find the one near you, Connect, the
Two
number 2, capital.com.
Yep.
CDFI. Now, Maurice.
Or you can just go to Bank of America's website. It's all there.
Bank of America's website. You know, we got to thank the bankers here.
We're the largest investor in CDFIs in the country. So we have over a $2 billion portfolio of CDFIs.
I sense a column coming. I have to talk to you afterwards. This is something new to me. Okay, I learned a lot today, too.
So you heard Terry mention my bio. She mentioned True Fund. True Fund is a national CDFI that I was the chairman of for 15 years. So when Katrina happened, we were the entity that launched into New Orleans and provided capital and loans to rebuild the 9th Ward and St. Bernard Parish. When Harvey hit in Houston, we were the entity that went to Houston and provided the capital to rebuild the city. When Maria hit in Puerto Rico, we were the institution that went there to provide the capital to support the small businesses. So I've been running CDFIs my whole career. The largest empowerment zone in the country is called the Upper Manhattan Empowerment Zone in Harlem. I ran that for 15 years. We provide the capital to redevelop the Harlem that you see today, as well as working with LIST. Terry mentioned it earlier, the Local Initiative Support Council. I was the chairman there for 15 years in New York, the largest affiliate of LIST. LIST is a national player. So all of these are CDFIs. So to Robbie's point, we have partners. We don't just work with B of A, we work with Wells, we work with Goldman, we work with Chase. We have partners because banks in that space, they understand how to be co-opetitive. Yes, we're competitive. We're supposed to be, because we deliver the capital that allows you to get the best product and services by being competitive. But we're cooperative when we need to be, because that's how we work together and we win. And the CDFI space is an opportunity for us to be co-opetitive. In that same spirit, we decided, because again, let's not forget where we were. The past 2 years have been tough. In February of 2020, we saw the death of Ahmaud Arbery. In March of 2020, we saw the death of Breonna Taylor. In May of 2020, we saw the death of George Floyd. 9.5 minutes, we saw the death of all of these African Americans. So because of that, many institutions, they have launched initiatives to support the work that needs to be done to close the racial equity gap. We have a $1.25 billion commitment, and our CEO has said that's the floor, not the ceiling, because we are committed to doing our part to try to close this gap. So that $1.25 billion commitment has led to over $50 million being invested in minority depository institutions, like Harvard Bank, like One United, and making sure we improve their balance sheet. And over $350 million going to women and minority private equity funds around the country. And I have all those names and all those partners to give you access to another $100+ million going to invest in not-for-profits.
Wait a minute. What's your phone number, Maurice? At Bank of America. What's your email? Maurice at Bank of America. I need money.
I'm easy to find. I'm really easy to find.
Okay.
My point here is that all of us have made a similar commitment. There are a lot of different programs out there. This is your moment. Don't let your moment not become a movement. Lean in right now, ask us. This is about getting you access to capital. We are doing it with partners. We're doing it directly. It's not perfect. We got more work to do, but we all must be in this fight together.
Thank you all so much. Latika at Women's Business Development Center, WBDC.org, Robbie Schapira, who heads up diverse lending at Wells Fargo, and Maurice at Bank of America. You have inspired us all, and we're going to have a second session that will even be more exciting. But first, a round of applause. Thank you so much. Thank you.